Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. We're going to talk about mid-cap and small-cap mutual funds today because there's so much chatter about how the broader end of the equity market has performed over the last 5 months in this sell-off that the Indian equity market has had to bear. And that has undoubtedly had a bearing on your portfolios as well. Some of you would have invested predominantly in small cap equity mutual funds based on the data that we've been seeing. Hopefully that isn't the case. Hopefully you've got a diversified portfolio. But if you've been a little more aggressive and you've got a longer term time horizon, then you might just have allocated more money towards the small and mid cap space. How do you correct some of these imbalances? We'll talk about that as well as certain data points that have emerged about the allocation that fund managers themselves are doing in the small and mid-cap space. Joining me to talk about this is Hemant Rustagi, who is the Chief Executive Officer of Wiseinvest Private Limited. Hemant, thanks as always for taking the time and pleasure speaking with you. Let me start by asking about what you think of the performance of actively managed mid-cap and small-cap funds in the drawdown that we've seen across the board since September end, October start. They've largely managed to do better than the benchmark, and I think that has to do with what we're talking about today, which is allocation. They've reduced it towards small and mid cap respectively.
Yes, Alex, I mean, since we're talking about primarily the mid and small cap fund, I mean, these are two obviously two of the segment of the market which are more volatile than the large cap. So obviously, whenever we've seen the downturn, the kind of downturn we've seen in the markets, obviously the focus has been more on the performance of these two segments. And obviously, if you see the performance, the returns are in the negative territory. But as you rightly mentioned, I think many of these funds have been able to outperform because a fund manager is basically a good fund manager is required to outperform both in the rising market as well as the falling market. Obviously, then the focus is on making sure that the fall in their fund in terms of negative NAV is less than what is the fall being in the index. So you are right in the sense that I do see some change in the allocation, Alex, there. But I think if you see the mid cap, if you see September data last year, and if you see February end data of let's say I've looked at around 14, 15 funds, the exposure to the mid cap is in the range of 65 to 68%, and which was the case even earlier. In fact, the exposure they have to mid cap, the small cap, and the large cap is more or less in the same band. But I think what has happened is, since specifically we have to talk about mid cap, and then I'll come to small cap, is that many of the fund managers have been doing two things. One is some of them have increased their cash level significantly. Obviously, that has worked in their favor. Some of them have made changes, even though they have maintained the allocation to the segment. But I think the portfolio mix has changed in terms of wherever they felt that some of the stocks are very aggressive in terms of valuations or even otherwise, they have kind of reduced the exposure or they've exited from there, and they have kind of ensured that the fall in the NAV is lower than the index. Similarly, in the small cap, also some of the fund managers have rebalanced the allocation, but more or less I can still see funds which are still maintaining 85, 87, 90% in the small cap, and they have been able to outperform the index. So I think important thing is that when these funds were doing well, how much risk were they taking? Look, it's very easy for a fund manager to perform well when the markets are going up, but I think it's important to see how much risk a fund manager is taking in creating that alpha. So many of these funds were able to do that, and I think that is what is also reflecting in the way these funds are performing during the downturn.
Okay. Now, despite the fact that we're talking about a relative outperformance of the benchmark, and here, Hemant, I've just as an illustration taken the top 5 mutual fund schemes in each category based on assets under management. And just to drive home the point, I'm not saying that these are the best performing funds, but this is simply for the purposes of illustration. We're still talking about significant drawdowns even for the best performing, in which case we're talking about Axis Small Cap Fund in the small cap category, which is the fifth largest in terms of assets under management. It has fallen 19%, whereas the benchmark has fallen 26% since the start of October. And for the mid-cap category, we're talking about a HDFC Mid-Cap Opportunities Fund, which has fallen 16.6%. And you're talking about the mid-cap category that has fallen, or the benchmark that has fallen about 20.6% in that time frame. So we're still talking about investors that have lost a significant amount of value. If you were to comment on the individual strategies of portfolio building that some of these schemes employ, what has worked and what has not worked?
Well, I think, like I mentioned, some of these funds, as I mentioned to you, that, for example, if I can take the name Motilal Oswal Midcap,
yeah,
it took concentrated bets focused on new age companies, and also on some of the emerging sectors like EMS, and the fund did very well. But if you see now, the cash level has gone up to almost 21%. They've exited some of the stocks where they felt that they were really high beta stocks. So I think that way, even if you look at Invesco Midcap, for example, I mean, the fund did very well, or even small cap, even Bandhan small cap. There are all these funds, they have always stuck to the quality, the liquid stocks, and ensure that, like Motilal Oswal, for example, took concentrated bet. These both funds have taken, well-diversified approach. I mean, there are more than 120, 30 stocks, even more in some of the funds. So I think different fund houses have taken different approach, and that has worked. And I think that shows in any fund's longer term performance. For me, I think it's more important is, one, what is the role that mid and small cap is playing in your portfolio? And the second is, when it comes to selection of fund, how consistent the fund are, or like I said earlier, how much risk the fund manager is taking in creating that alpha for you. Because for me, that is important, because I know that if the fund manager has the capability to do well based on the quality of the stock and the liquidity of the stocks, then I think the fund manager should be able to even perform well when the markets go down.
Okay. Now, specifically on the size of some of these schemes, Nippon India, for example, 57,000 crore assets under management. It is, in fact, twice the size of the fifth largest. HDFC Midcap Opportunities Fund, 73,500 crore assets under management. It is very considerably higher than the fifth largest, which in this case is Motilal Oswal Midcap. Does it, in this kind of a market, become harder for these schemes which have a larger assets under management to be a little more nimble, and as a result of which you're talking about, even if they have, in this case you're talking about 68% allocation as per my data in the Nippon India Small Cap Fund towards small cap, and HDFC Midcap having 65.07 towards midcap, despite that, they have relatively less maneuverability, Hemant, and ability to duck for cover. They would have to take cash if they had to do that, because you're seeing a broad-based sell-off.
Yeah, I mean, Alex, I agree with you. Look, the issue is that when specifically if we talk about small cap, sometimes we used to earlier talk about the size of the fund becoming an issue. But I think there are some of the funds that have shown, like you talked about Nippon Fund and the HDFC Fund, that even with a much larger corpus, these guys have shown that it is possible for them to manage it well. I mean, even on the upside, these funds did pretty well, and even now, if you see that, they have done well. So, see, for a fund of that size, it becomes very, very difficult to increase the cash level, because then you're exiting, and then you're putting more pressure on the segment. And then, one of the key factors, specifically for the small cap, is how liquid the stocks are. Now, for example, if you start selling liquid stocks, okay, and then the proportion of the illiquid stock goes up, and that puts more pressure on the NAV.
But Hemant, what about incremental? I'm talking about, okay, so what if you're not, sorry to cut you, but just to clarify what I was meaning by that. What I meant is incremental flows into these schemes, they're able to take cash calls.
Yeah, they can. They can. Yeah, true. But again, it depends on, look, if you're talking about the kind of corpus these guys have and the SIP inflows that will be there, I mean, if you see most of these funds have been getting money through SIPs. Of course, they have been like even the lump sum money, but the proportion is not that high that can really help them increase the cash levels. So I think it's the question of their ability to manage the portfolio in such a manner that it works in both kind of markets. I think that has been the key.
Okay, so I want to specifically talk about what now, Hemant, because I know a lot of people have, as I said at the start, allocated money towards small and mid cap, possibly in the schemes that we've discussed already, and they're seeing gashes in their portfolio, understandably, because the entire market has witnessed that. Even in the large cap space, even the large cap space has not gone unscathed. So from that perspective, how do you correct imbalances? What, in your opinion, is an imbalance?
So there are two important aspects here. One is the role that mid-cap and small cap can play in your portfolio. And the second is how much allocation you have in your portfolio. Now, if you really see, if you leave out the last 6 months, obviously the markets have been very volatile. Before that, if you see 2 years, mid and small obviously were doing very well. Prior to that, if you see, the market breadth was very narrow. There were few stocks that were doing well. Only the large caps were doing well. And I can tell you from my experience and my dealing with the clients and investors that most of the portfolios were large cap heavy. There was hardly any exposure in mid and small. So obviously what happened when the market became broad-based, the market started doing well, the allocation to mid and small cap increased. Now, we can't work on the assumption that everyone who is investing in these two segments is investing for the short term or is becoming very aggressive. I think you need to look at it in relative term as to what was the portfolio size earlier and how much money has been added to small and mid cap. So I think anyone, for example, anyone who's investing for, let's say, 15, 20 years for the retirement and has 10, 15% exposure to small cap and maybe another 15, 20% in mid cap. After all, we are talking about collectively the 400 companies out of the top 500 companies. So I think I believe that there is nothing wrong with the segment. The important aspect is how much exposure you have and how you have exposure. That's why I always recommend that for many investors who may find rebalancing difficult, there are some categories like multi-cap, which will have to necessarily invest 25% each in all three. So what happens is, irrespective of market condition, you're still maintaining that. So I think there is a way in which investors can, despite the fact that a fund manager is managing your money, control how much money should go into this. Second thing is, anyone who invested in these two segments, specifically if you talk about small cap, thinking that this is a good time to make money, definitely this is the time for them to rebalance if they have not done that already. But otherwise, as long as you have clarity in terms of your time horizon, you are investing in a disciplined way. Alex, I think we'll all agree that in the last 6 months, if somebody has been investing through SIP and is invested in a good quality fund, this has been a great time for them to bring their average cost down.
Yeah.
Prior to that, every single investment was going at a higher NAV. I think it all depends on each investor's portfolio composition.
Yeah. I'm glad that you pointed that out, because that ultimately is the goal of the SIP, to reduce the unit cost of whatever you're investing in. And these are great opportunities, as you've pointed out. So based on the illustration that you gave, 40% allocation in an aggressive portfolio towards mid and small cap is okay. It's not too bad. But having said that, a lot of people end up, Hemant, chasing the winners in any given period of time, as a result of which sometimes they will have multiple mid-cap, multiple small-cap schemes in their portfolio, and they run the risk, therefore, of duplication of holding. Because ultimately, there are only so many stocks that mutual fund schemes can invest in. I'm just wondering whether this is a time to also consolidate into a scheme that you would favor or want to favor. How do you go about doing that? In your opinion, is one scheme per category enough to hold?
Well, I think usually I would say yes. I mean, look, there are two questions that always asked. How many funds should one investor have? Now, within category, how many funds I should have? The point is, when you look at the number of funds, obviously it all depends on different goals of yours. We're not talking about entire portfolio being in 4 or 5 funds. But if someone is investing for the long term, for example, for child education, for retirement, or any goal which is long term, and you're investing in equity, look, I always believe that you need to have the right kind of exposure to all 3 segments. Now, there are different categories that you can look at, as you rightly mentioned. The chances of overlap are very much there in large cap and the mid cap, because the universe is such that the top 100 companies are large cap, next 150 are mid cap. Small cap will obviously have minimum 250 stocks, and some of them may even have stocks from the micro cap. So I think the universe is larger, wider there as compared to this. So I think the approach also is different of fund manager. Like I said, some are taking concentrated bet, some are going more for illiquid stocks, some are going more for liquid stock. Yes, ideally speaking, one category from one fund from one category, maybe from different fund houses, ensuring that you are getting advantage of different investment philosophy should be fine. So I think broadly it depends, but also it depends, Alex, on what is the size of your portfolio.
Yeah.
If someone has been investing for last 20, 25 years, 15 years, the corpus is much larger.
Yeah.
Okay. In all probability, you may end up having more than one in one category.
Yeah, because otherwise you're running the risk of concentration in one particular scheme. But just the last point that I want you to make, Hemant, is of course you will have schemes that you like. I'm not asking you to make a recommendation, but based on the metrics that you pay attention to, what schemes, in your opinion, should an individual shortlist right now to look at in both of these categories?
Well, I think, yes, I mean, each person would have different parameters to look at. I explained some of what I look at for me, what is more important. But if I need to look at some of the funds in, let's say, mid-cap category, one obviously would be HDFC mid-cap. So someone who's looking at a more consistent kind of return over a longer period. In terms of potential, I would say Invesco mid-cap, Kotak emerging, and Motilal Oswal mid-cap. In the small cap would be again Bandhan small cap, Nippon small cap, and Invesco small cap. I think these are three funds I feel have the potential if someone is looking at really start investing in these two segments.
Fantastic. Hemant, thank you so much for joining me on Your Money Matters. Absolute pleasure having you on the program. All right, there you have it. So a conversation, comprehensive conversation and that about the performance of the small cap and mid cap category and the strategy that these fund managers have employed. Of course, don't base your decision on where to invest based on what's happened over the last 5 months, because everybody's gotten hammered and hammered hard. But use this as an opportunity to review your portfolio if there are imbalances that have been created.